Markets, we'll start out with Asia. It's looking like quite a good start, actually. So you're seeing the Japanese index, which is 350 points higher right now, looking quite strong over there, 1.4% in the green. Hang Seng also around 80 points higher. Shanghai seeing just some minor gains at the start. All of the other Asian markets will come up for you, and it's looking largely positive there as well. Straits perhaps the only Asian market today, which is seeing a little bit of red, so it's around 0.7% lower. Taiwan and Kospi, you can see, holding up quite well. The Taiwan Index is 1.5% higher, so that's looking quite good again. The SGX Nifty will also come up for you, so take a look at that. That's currently at 14,662, but of course you have to adjust this for the futures closing price which we saw on Wednesday, which was at 14,708. So perhaps a slightly lower start for our own markets. We'll see how the day builds from there, of course. That's what's happening in Asia. Let's talk about the US markets. Wall Street ended higher in the overnight session, snapping a three-day losing streak. So we saw the Dow put on 400 points. The S&P 500 rose around 1%, while the Nasdaq was the relative underperformer in the US. Now, while we're talking about the US, the big Q is the inflation data, which was released on Wednesday. Now, inflation in April accelerated at its fastest pace that we've seen in more than 12 years to come in at 4.2%. Remember, this is versus expectations of a 3.6% increase. CNBC's Rick Santelli has some more details on this.
We had CPI for the month of April, a rather large April CPI. We'll go through each component. Up 0.8 on the headline. We're expecting up 0.2. That's the highest month-over-month headline since 2008. Up 0.9 when you strip out the all-important food and energy. Expected to be up 0.3, the highest in 40 years. 40 years. And if we look at up 4.2 year-over-year headline, that is the highest since 2008. So you see there are big moves here. Now, the year-over-year moves, many economists, most economists have been telling us that's happening, and it's one of the reasons the Fed keeps using the word temporary or transient, because if you look at April, May, June of last year, 2020, in the heart of COVID, those inflation numbers on the year-over-year were very low. So as you go back and comp those weaker, smaller numbers, it really does make current levels look bigger. And they should, they are bigger, but it really brings the point home. So the key is going to be, once the year-over-year numbers start to get into July-ish of 2020, that effect is going to dissipate somewhat. So we want to see what type of momentum inflation has at that point to see if it's passive or active, so to speak, on a year-over-year basis.
All right, Rick, thanks a lot for getting us all of that action. Of course, this is the big cue from the global markets. But now that we've spoken all about the global market action, how will all of these cues impact our own markets? We have our research team joining in to tell you exactly that. Ekta, Nupur and Nigel join me this morning. Hi, guys. A very good morning to all of you. Ekta, let me come to you first. What are the cues looking like for our own markets this morning?
Well, it's definitely the global cues, which is basically the inflation data which you alluded to from the US, which is going to dominate in terms of a cue. But just to give you a quick recap in terms of what took place on Wednesday for our trading session, the markets did slip amid weak global cues. We had the frontline indices which fell around 1% each on Wednesday, and the Nifty Bank which slipped around 420 odd points as well. Now, like you mentioned, it is global cues along with COVID-19 numbers as well as earnings which will continue to be in focus. So for the US markets, they did close higher yesterday. Inflation figures were the key news point which the market was tracking. We have Asia, which is largely higher at this point in time, and the SGX, which is indicating a bit of a positive start. Brent crude has been largely fluctuating within a band of $68.6 to around $69 per barrel just in the past couple of trading sessions, so it remains within that range. And in terms of the macros that we are tracking back home, we had the IIP, which came in for the March month. It came in at around 22.4%, expected due to a high base. CPI at 4.29%, which was largely in line with expectations of around 4.4%, but core inflation continued to remain sticky. Lot of result reactions today, so the market will be concentrating on that as well. Lupin, Piramal Enterprises, Emphasis, Brigade, Vinity Organics, Eris Life, to name a few, and a lot of earnings today as well. Heavy day in terms of numbers. L&T, Cipla, Dr. Reddy's, Vedanta, Escorts, Just Dial, to name a few.
Okay, Ekta, thanks a lot for getting us all of those cues. Let's talk about the stocks that are likely to be in focus today. Ekta did mention a few, Nupur, but yesterday was a market holiday, which means we've missed a lot of that action. So take us up to, bring us up to speed on that.
Well, absolutely, Pavitra. Many companies reported their Q4 earnings, and let me start with this stock, which is up 14% this month and 50% so far this year on the back of early debt reduction. I'm talking about UPL, where company reports very strong Q4 numbers, beat estimates, operating profits up 31%, margins also expanded, and company managed to reduce debt in Q4. Moving on to the Hindalco, where subsidiary Novelis reported its Q4 earnings, shipment up 21%. Adjusted EBITDA per ton up 32%, and management guides for EBITDA per ton of 500 per ton and sees debt reduction as well. Pidilite, where company reports revenues largely in line but missed on margins due to rise in input cost. But consumer volumes are 45% in Q4 versus poll of 25 to 30%. Lupin, well, it's a 2% decline when it comes to top line, but reports very strong operational numbers, operating profits up 35%. JSPL, strong numbers coming in there as well, profit beat estimates, and still EBITDA per ton came in at multi-year high levels and also beat street expectations. You will see many earnings reaction from broader market, as Ekta pointed out, from the likes of Vedanta, Orient Electric, Polycab, Apollo Tyres, and lastly, keep an eye on Spark, company to issue 6.74 crore warrants worth 1,200 crores to 34 investors and promoters. Back to you.
All right, Nupur, thanks a lot for bringing us all of those stocks. We will keep these on our radar today. Finally, let me hand it over to Nigel. He has all of the cues from the futures and options space.
Well, first up, on Wednesday, we did see a bit of a sell-off in the markets, particularly in the last 90 minutes were under pressure. One could say that, yes, there was weekly options expiry that was taking place, but the other factor was the cash market selling that you saw from institutions. Between them, they sold close to around 2,000 crores. Keep that in mind. Now, in a live market, you track the premium on the Nifty. And in fact, in Wednesday's trading session, that premium just a few sessions ago was at around 40 points. Well, that's come down to around 13 points, or telling you that there were some shorts that were getting added. And that's precisely what the FIs did. They added more than 5,000 short contracts. And in fact, just, in the ratio of around 5 shorts for around 1 long position. And just take a look at now how, their positioning on the index has changed. Because at the start of the series, well, they were net long on the index. They had more than 75% of their positions on the long side. Gradually, that number has come down to around 40%, and now the short positions consist of around 60% of their total positioning. Keep in mind, short positioning on the index not such a bad thing, because if the FIs don't get follow through, they'll be forced to cover those shorts, which could help the bulls push the markets higher. Technical levels you're tracking. 20 and 50 DMA, those are going to be the most crucial mark. Remember, the 20 DMA is at around the 10,620 approximately, so support being seen out there. And on the upside, the 50 DMA that was a support, well, that'll become a bit of resistance, so keep that one in mind as well. The bears, well, they have made their intent very clear. They want to defend the 14,950 to around 15,000 mark, as we have seen numerous times, so keep that in mind. In fact, in terms of stocks that you're looking at, a couple of stocks are in the band, so keep an eye out on them, while the stock that's coming out of the band is Nalco. So that one should be a stock that you should be looking at. And also the SGX Nifty, well, that's suggesting a start at around 14,660. So that would mean we're likely to start with a cut of around 40 to 50 points. Back to you guys.
All right, Nigel, Nupur, Ekta, thank you guys very much for joining us and prepping us up for this trading session. With that, we'll get into our first short break in the show. But up next, we get you a detailed update on the coronavirus situation across